Hi, and welcome to this edition of the Options Learning Center. My name is Rick Orford, and I've been a stock and options trader since 1999. And today, I'm excited to show you how to sell short put condors and use bar chart to get the most out of the strategy. A short put condor is a directional options trading strategy that involves buying and selling put options at progressively higher strike prices on the same underlying asset with the same expiration date. This strategy combines a bear put and a bull put spread and works best when significant price movement in either direction is expected. To set up the trade, you'll sell an in-the-money put at one strike, buy a put at a higher strike, buy another at an even higher strike, and finally sell a put at the highest strike. The result is a combination of a bear put and a bull put spread that creates a short put condor, resulting in a net credit or a net premium. The goal is for the asset price to either move below the lower short strike or above the higher short strike, which will result in maximum profit. Maximum loss occurs if the asset price trades within the long strikes. Now, I'll show you how to find short put condor trades. First, let's go to barchart.com, then click on Options at the top, then Short Put Condor. This is the results page where several potential short put trades are already displayed. There's important information about the trades, including strike prices and premiums, maximum profits, losses, risk-reward ratios, and loss probability. You can click on any of these headings to arrange them from highest to lowest, or vice versa, depending on your preference. The results here are a perfect starting point for trading, but if you want to fine-tune your screen, you can click on the Set Filter tab to access the Options Screener page. From this page, you can see several default filters already in place, which are perfectly fine to begin. You can head over to the Add a Filter field and type in potential filters to add, then click Add, and then it'll be added to the filter list here at the bottom. Now, if you're unsure of what to search for, you can click on the drop-down menu and choose from different filter categories. You can also delete any filters that you don't need by ticking the box beside them and then clicking on Delete. Now, I do want to scroll down to the bottom where we'll have probability of loss. As the name suggests, this filter shows the chance the short put condor will end at a loss, even by 1 penny. The lower the probability of loss, the lower the potential profit and the higher potential dollar loss value. But since short put condors have an inherently high risk-reward ratio, I'll take my chances on a safer trade and set this value to 20%. Now, I'll click See Results. Okay, so here we go. Now, let's see what happens if I sort by loss probability. All right, so this trade on top doesn't offer a lot of credit. Let's see what happens if I click on the max profit column. Well, this looks a lot better. Now, before we discuss this trade, let me show you how to save your screener so that you can reuse it later. You can also have Barchart email you at a specified time with your trades. Just click Save Screener near the top right, then type the name of the screener, and click on when you want the email to arrive. Then click Save. And that's all you need to do to stay updated. Okay, so let's get back to the trade example. On top of the list is a short put condor on Tesla. The stock currently trades at $260.46. To make the trade, you'd sell a $250 strike put for $13.65 a share, and buy the $255 strike put for $16.10 a share. You'll also buy a $270 strike put for $24.45 per share, and sell a $275 strike put for $27.45 per share. This setup will result in a net credit of 55 cents per share, or $55 total, while your maximum loss is $4.45 a share. The trade has an 8.09 to 1 risk-reward ratio and a 19.4% probability of loss. All options expire on October 18th, which is 18 days from the date of recording. To calculate the break-even points, add the net credit to the lowest strike price for the downside, which is $250.55. On the upside, take the highest strike price and subtract the net credit, and that works out to $274.45 per share. If the price of Tesla stock trades below the lower short strike or above the higher short strike at expiration, you'll get maximum profit. Again, maximum profit for any short spread is the net credit received at the start, which in this case is 55 cents a share or $55 per contract. On the other hand, if Tesla's stock trading price fails to move beyond the long strike prices by expiration, the trade will end at a maximum loss. To calculate the maximum loss, take the net credit received and subtract the width of one side of the spread. For this trade, that's $4.50 a share or $450 per contract. Here's the profit and loss table at different price points to give you a better idea of how this short put condor works. Notice how the trade only starts to profit when the stock trades below the lower short strike and above the higher short strike? And losses occur when the stock trades between the long strikes. The range between the short and long strikes will result in partial losses, which is why knowing your break-even points is important. So that's screening the entire market for assets to use in short put condor trades. But what if you have a specific stock in mind? Well, that's also easy, and let me show you how. First, go to barchart.com, then search for the asset using the search bar. For example, I'll look for Micron. Once on the stock's profile page, navigate to the left and look for Condor strategies. Then, click the Short Put Condor tab and you'll see the trade search results. You can click on the drop-down to change the expiration dates, change trade legs, rearrange each column, or click the Screen button to reach the Options Screener page, and then you can click on the Set Filter tab for a more granular search. And that's it. Options trading comes with assignment risk if a short option is in the money. So any trade that involves writing or selling options puts you at risk for assignment. For the short put condor, you have two short positions in the trade, and if either of them are in the money at expiration, the option will automatically be exercised, or in your perspective, you'll be assigned. That's why it's best to close out your trade at or before expiration. Short put condors, like all spread strategies, have limited risks and a well-defined trading profile that you can calculate at the start of the trade. It's also ideal to use during times of higher volatility. Lastly, setting it up results in a net credit at the start of the trade. However, like all spreads, it has limited profit potential. The trade also requires 4 working trade legs, which can be complex to manage, especially for beginners. And on the subject of those trade legs, each one of them comes with corresponding trading fees from your broker, making it potentially costly to set up. Lastly, the strategy has 2 short positions that may be open to the risk of assignment. The short put condor can be a great strategy in times when markets are experiencing significant price swings in either direction. However, it comes with its own drawbacks, especially the high trading costs and risks of assignment. That's why it's important to maximize your chances of success and using resources like an option screener. If you need more information, visit the Barchart Option Learning Center, where you can learn more about all of the other options trading strategies, how they work, and how to profit from each.